Seniors across the country are losing their life insurance policies just when they're most likely to need them. So what can you do to protect yourself? Well, that's what we're talking about in tonight's Financial Fix. Jaime Westenbarger from Forest Hills Financial joins us to explain.
So, particular type of life insurance policy that was really popular came about in the 80s when interest rates were really high. Many people out there probably own one. It's called a universal life policy.
Those are the ones you always hear advertised like, oh, I got it for 10 cents a month.
Right,
yeah.
Right. So the idea behind universal life was that since interest rates are so high, you pay a little bit more premium in the very beginning, and every year your cost gets a little bit higher, but you're making all this interest, so that can kind of offset the increases in cost.
Because you paid up front.
Because you kind of paid this upfront amount.
Right.
The problem is when it was sold with the idea that interest rates would always be high, sometimes as high as 15 or 16%. We don't really live in that world now, and we haven't for really quite some long time. So what's happened is the illustration that may have been shown to someone when they bought it in the mid-80s does not really reflect the performance of what the policy has done. So now they're in a situation where there is no cash value, and those costs continue to climb, sometimes as much as tens of thousands of dollars, where they used to be paying maybe $100 a month.
So this is a huge payment for them.
Can be a huge payment, can actually cause someone to lose their life insurance policy because they can't simply afford to make that.
And then you lose everything that you've built up to then.
Absolutely, especially if they're relying on the information they received 30 years ago and haven't been paying attention to what's been going on with the policy. It may come as a complete surprise. Someone could be really ill or even terminally sick and be in a position where they just can't even afford to keep the policy in force anymore.
So is there a remedy as long as interest rates are low? What can you do?
Well, the first thing is you need to know if you're one of the people that's going to be affected. So if you haven't looked at an in-force illustration of your policy, you need to call your insurance company and order one, and they can send you one by email or fax, and it'll show you, based on what things are going on right now with interest rates, what is the longevity of your policy. That'll let you know if you have a problem in the first place.
And if you know that you have a problem,
yeah, now you need to start looking and see what the issues are. So the cash value is too low. Now start assessing, do I have health issues? Could I potentially maybe qualify for a different type of policy?
Lower your benefits a little bit.
Lower the overall death benefit. There's a lot of different remedies that you can definitely look at, but the key is addressing it now before you get that notice in the mail from the insurance company saying, here's your new premium, and it's more than your house payment.
Another reason to kind of seek that professional advice.
Yeah, it really is. This is a good time. If you have a universal life policy, call an independent financial advisor. They can look it over with you. They can go over the illustration that's provided by the insurance company and help you decide what you need to do with it.
And if somebody wants to talk about more money issues, savings, and retirement, you have the radio show.
We are every weekend. Keeping Your Money show, times and stations there on the screen, or they can always find us on the web at keepingyourmoney.com.
Jamie, good to see you. Thanks for stopping by.
All right.